Namaskar learners. I, Harpreet Kaur, welcome you all on behalf of National Institute of Open Schooling. We are back with yet another video program of ours specially meant for our senior secondary level students. And this time, the subject is accountancy. We have brought for you a very interesting, informative, important and a practical topic. We are going to talk about bills of exchange, what they are and how they are exchanged. We'll talk about it all, but before that, I would like to say something. We all know that nowadays, business is done mainly through credit. Yes, the transactions are done on credit basis. Goods are sold on credit, goods are bought on credit. And in this process, a huge amount of capital is blocked. Then there is always an element of uncertainty whether the amount will be paid back or not. So, one needs a proof in writing, and that proof is known as bills of exchange. But we have an extended and a very formal definition of it. We'll talk about it, but before that, let me introduce our experts to you. Today for this discussion, we have invited in the studio our expert, Mr. S.K. Bansal, who is a retired lecturer from Commercial School, New Delhi, along with Dr. Piyush Prasad, Academic Officer, Accountancy, NIOS. I welcome both of you to the studio.
Thank you.
And now the first question is coming your way. So, as the topic says itself, it's bills of exchange. Please tell us, what do you mean by bills of exchange?
When a businessman sells goods to another businessman, regarding payment there can be two situations. Either the buyer makes the payment in cash, or the payment he may say would like to make the payment after some time. So if it is agreed between the two, the payment will be made say after 15 days or say 1 month or 2 months. Well, in that case the seller would like to have it in writing. The commitment which is made by the buyer, he would like to have it in writing. The written commitment by the buyer to the seller regarding the payment of the goods purchased by him and the fact that he has purchased the goods on credit. Well, this instrument is credit instrument, and these can be of two types. One is bill of exchange, another is promissory note. These are two very important instruments which are in practice in the business community.
Okay.
So far as bills of exchange is concerned, it is regularized by the Negotiable Instrument Act of our country, and the act has given a definition of bills of exchange. Well, the definition goes like this: it is an instrument in writing which contains unconditional order. It is signed by the maker, and it is directing the certain person to make certain amount of money to a certain person or to his order or the bearer of the instrument. So this is how bills of exchange has been defined by negotiable instrument. Now this instrument should bear the date on which it is written, and it should bear the signatures of the person, that means the creditor or the seller of the goods, and then it is not sufficient. It will not make it a legal document unless and until it is accepted by the buyer or the debtor. So he will put up his signatures after writing the word accepted, and he will put up his signature. Now it becomes a legal document which binds both the parties. So this is how we can define and give the meaning of bills of exchange.
So that was the meaning of bills of exchange, and there is a formal definition to it. And we came across certain terms like there's a debtor, there is an acceptor, there has to be sign, there has to be date. All these things are basically covered under the features of bills of exchange. So let me ask the features now. Piyush sir, I would like to ask you, what are the features of a bills of exchange?
Now, as far as the definition is concerned, definition itself contains the number of features.
Yes.
First of all, there are two different persons involved in it.
Yes.
So one person, that is a creditor, has to draw a bill on a debtor.
Okay.
That is, one person is going to make a bill while the another person has to sign on it.
Yes.
That is known as a debtor, or we can say as an acceptor. So first condition says, or one of the features is that it is going to be made by the maker.
Okay.
He is going to sign upon it. The second is that it is an unconditional order. There should not be any kind of condition involved in it.
Yes.
Like for example, the buyer can say that I am only going to pay the money if I like the goods.
That's right.
Or if I am in a position to sell the goods, I can make the payment. No such kind of condition is going to be involved. It's totally unconditional. The third point says that it is going to be acceptable by the drawee.
Okay.
That is, a person who is buying the goods should accept it, should agree to make the payment on the due date.
Okay.
The fourth point says that there should be a certain date on which it is going to be paid, because it is decided well in advance on which date the goods are sold and when the payment of those bills are going to be made.
Okay.
That date is going to be very, very certain.
Yes.
It can't be okay, I'll take the goods and make the payment as and when the money would be available to me. So that date is certain. Then there is going to be a specified amount mentioned over here. That amount is to be paid to a person and that amount should be the same as mentioned in the bill. Then there is a specified place where the payment of that bill has to be made. So according to that place, the payment of the bill will be made.
We have already discussed the features, and definition itself says a lot about it, but then there are certain parties and we need to define those parties. Which parties are involved when a bill of exchange is drawn? So let's talk about the parties here. And sir, please tell us about the parties of bills of exchange.
If you go by the definition of bills of exchange, you will find there are three parties to the bills of exchange. One is the drawer of the bill, who is generally the creditor or the person who has sold the goods on credit. So he is called the drawer of the. The second party on whom the bill is drawn, or the debtor or the buyer who has purchased goods on credit, well, he is the drawee of the bill. He makes the payment. He is responsible to make the payment. Then there is the third party also who will get the payment. So the drawer himself may get the payment. If he keeps the bill till due date, well, in that case he will be the payee also. But if this bill is transferred in somebody's name, say it has been, say, we will take up later on, it may be given to the bank, may be discounted with the bank, or it may be endorsed to someone. Well, in that case, that someone or that other party will take the payment, will get the payment from the drawee. So he is called the payee. So there are three parties: drawer, drawee, and payee.
I will like to add on this. Sir has absolutely told that there are three parties in it. To get it much more clarified, if we are going to take an example, suppose there are two persons, A and B. A is going to be a seller of the goods and B is going to be the buyer of the goods. Say a specified example, say that A sold the goods of rupees 5,000 to B with a condition that B is going to make the payment of that bill after 2 months, or the payment of that amount is going to be made after 2 months. Now here the A is not very sure whether he is going to make the payment on the due date or not, and how the B is going to make the payment. So he requested B that what should I do so that I can give you the goods on a credit. B says there is no problem, you just have a bill. So first of all, everyone should know what is bill. Bill is an instrument for which the payment is going to be made on a later date once we consume it. For example, we are going to get an electricity bill. When we consume the electricity, when we use it, the electricity department sends us the bill. A telephone bill, we use the telephone and then the telephone department is going to send us a bill. If it is in terms of cash, it is a cash memo, and bill is a document which we receive after consuming the things. So A says fine, absolutely fine, I am ready to draw a bill, but how it is going to help me? B say, once you draw a bill, I am going to sign on it with the word accepted, or I am going to give my acceptance, I am going to make the payment of this bill on so and so date. So here A, the person who draws the bill or who is the seller of the goods, is the drawer, as the sir has told you right now. Then there is a person known as B, who is a purchaser, who sign upon it, who agree to make the payment on a certain date, is known as the drawee. Then there is a third person who is known as the payee. This payee is exactly a person who actually going to receive the money. Now we know that A is the seller, so A is going to receive the money. But there could be the possibility that A himself is not going to go and collect the money from B. He may send some of his employee or some of the person who can on his behalf collect the money, or there may be a possibility that A transfer the bill to someone else who will on behalf of A would collect the money. So whosoever is going to collect the money from B will be known as the payee.
So we learned main four terms, that there is a drawer, drawee, acceptor, payee, and there's a difference between a cash memo and a bill of exchange. Bill of exchange is a credit instrument. And sir, though you already mentioned that there are two types of bills of exchange, but would you like to elaborate on different types of bills of exchange?
There can be two types of bills of exchange. One is trade bill, another is called accommodation bill. Generally, the bills of exchange is written by the creditor or the seller when the goods are sold on credit basis.
Okay.
This is called trade bill. In this case, the consideration is the amount against of the goods which have been sold, and the payment is to be made on some later date. But then there can be another type of bill which is called accommodation bill. This bill is actually drawn by one party on the other party, which is accepted by the other party, just to give a financial assistance to the drawer of the bill, because in that case the drawer of the bill will get this bill discounted with the bank and get the money. So this is how and both the parties may draw such bills on each other. So helping each other, because bill can be discounted with the bank, so the holder of the bill will get the payment. So this is how they will get a financial assistance. So this is called accommodation bill.
Really happens in terms of market that there are different traders, those who are doing the same kind of business.
Yes.
And they all are in need of money. So they approaches to a bank to take some finance.
Okay.
Bank says, fine, we are ready to give you the money, but we want some security.
That's right.
So what happens over here? Suppose again I am taking an example to just get it much more clarified. There are two parties, A and B.
Okay.
Both of them are the seller. No one is going to be the buyer. A is in need of money. Say for example a 10,000 sum of money. He approaches to B. By give me 10,000 rupees. I am in need of it and I'll return you after a month or something like that. B says, you are absolutely right, but I don't have the money with me right now. What I can do is, you draw a bill upon me. I am going to sign it. I am going to say accept it, with the condition that I'll pay you the money after a month.
Okay.
A say, bhai, that's okay, but I am in need of the money today itself. What to do? B say, okay, you do this thing. So A draw a bill on B, B sign it, accept it. A take that bill to the bank as a security. Sir, this is a bill with me which is accepted by B, who is going to pay me the money after a month. So you can take this bill as a security and give me the money today itself.
Okay.
Bank take that bill as a form of a security, get it discounted. Discounting means that bank is going to deduct the charges for that period of time for which the bill is made and make the payment to A immediately.
And bank will not the full payment of the bill?
No.
Okay.
The full payment of the bill is going to be received by the bank from
itself.
the B itself.
Okay.
So A is going to get a help. Such kind of helping bills are basically the accommodation bills.
Okay.
And when the real trade took place between the two different persons, goods are sold or purchased or the services are provided, then they are basically called as the trade bills.
And now there are certain terms which we need to learn if we are studying this chapter, bills of exchange. There are many important terms. So let's start with the very first term. Dr. Piyush, I would like to start from you. What is the first term that comes when we study bills of exchange?
We have already talked about the terms that drawer, drawee, payee.
Yes, yes.
Now there is a very important thing is in case of the bills of exchange, that is the days of grace.
Yes.
As per the Rules and Negotiable Instrument Act, 3 days grace period is allowed
Okay.
on the date on which the bill becomes due.
All right.
Now this is a very important term. Our learner should know this thing well in advance, that how this date is going to be calculated.
Yes.
Suppose a bill is drawn on 1st of January with a period of 1 month. That is, the payment of the bill is going to be made after a month. Now as the bill is drawn on 1st of January, the due date comes out to be 1st of February after a month.
Yes.
Now 3 days of grace is going to be added in it. So it would be 2nd, 3rd and 4th.
Yes.
The 4th is going to be the due date on which the payment of the bill is going to be made. In case of days, suppose a bill is drawn on 1st of February
Okay.
with an expectation that the payment, or it is agreed between the buyer and seller that the payment of this bill is going to be made after 15 days. Now in case of days, the date on which the bill is drawn, we exclude that date. And from 2nd onward, we are going to count the 15 days.
Okay.
15 days are going to be completed on 16th of February.
That's right.
And we add 3 days of grace to it.
Yes.
So it becomes 17th, 18th and 19th.
19th.
So the payment of that bill is going to be made on the 19th of February.
All right.
And suppose by chance, if the due date comes out to be a national holiday or a public holiday, then the payment of the bill is going to be made a day earlier.
Okay.
Suppose by chance, if the due date is going to be 26th of January or 2nd of October, which is a national holiday in our country,
right.
then in that case the payment will be made 1 day earlier.
Okay.
And by chance, if it is a local holiday, like a local closing of Sunday or something like that, then the payment of that bill is going to be made 1 day later.
Okay.
In place of Sunday, it would be made on Monday.
All right.
So this is the due date which you should know well in advance.
Okay.
Then there is a term known as retiring of bill under rebate. As it has been agreed between the two different parties when the payment of bill is going to be made.
Yes.
Suppose if the buyer is able to arrange the funds well in time, or say before the due date of that bill,
Okay.
he approaches to the seller with a condition कि sir, I have got the payment with me, I would like to make you the payment, so that his creditability may increase, its credit worthiness may increase. Then in that case, it is known as retiring the bill under rebate, and the seller
Okay.
or the drawer is going to give some rebate, some discount, because the payment is going to be made before the due
Before
date.
time. Yes.
We have also discussed the term that this bill could be discounted from the bank.
That's right.
There are two parties involved in it, A and B. Say for example, again and again I am quoting so that you could be clear about it. The concept should be there in your mind. A is a seller, B is the buyer.
Yes.
A sell the goods to B for 10,000 of rupees, and the condition is that the payment of this bill is going to be made after 2 months.
Okay.
A agrees,
Yes.
B also sign up on it, and B goes back with the things with a copy of the bill.
Okay.
Suppose after 4, 5 days, 10 days, A is in need of money. As per the agreement, A cannot approaches to B
Yes.
to collect the money, because it was a agreement between them that the payment is going to be made after 2 months. Under this situation, A can take the help of the bank. A will approach to a bank with a request ki sir, I have got a bill with me which is payable after 2 months. I am in need of money immediately. Bank will take that bill as a security,
Okay.
calculate the interest for the period, for the number of days which are left aside in getting the money.
Okay.
Accordingly, that interest will be deducted from the amount of bill, and the remaining amount will be paid to A or the seller.
Okay.
On the due date, bank will approaches to the buyer named as B. Okay, sir, you have accepted a bill, please make the payment.
All right.
Now, the B will make the full payment to the bank. So, this facilitates all the three parties involved in it. That is the A, who is a seller who got the money well in time, B, the buyer who makes the payment after 2 months, and the bank who got the interest and as well as the security on against which the payment is going to be made. So, these are some of the terms which we are going to use in our lesson as and when we continue.
Okay. So far, we learned about the definition of bills of exchange, its importance, its features, different parties to it, and what are the important terms that we use while drawing a bills of exchange. And now we're going to talk about the accounting treatment of entries that we do when a bill of exchange is drawn, endorsed, and there are two more. So let's take up the accounting treatment of the entries. So I'll start with you. Let's take the first two situations, the first two scenarios when a bill of exchange is drawn and accepted by the drawee.
So, when the bills of exchange is drawn by one person on the other person in case the goods are sold on credit. So, let us suppose there are two parties A and B. A has sold goods to B. In that case, entries in the books of A and B will have to be passed for the sale of the goods on credit. In the books of A, the entry will be B will be debited and sales account will be credited.
Okay.
In case of B, because he is the buyer, he has purchased goods on credit, so purchases account will be debited and A's account will be credited.
Okay.
Now, when B has accepted it and it is returned by B to A, so A receives the bill, so bills account will be debited. It is called bills receivable in this case.
Okay.
And because it has been received from so B's account will be credited. Now, when I go to B, well, he has sent the bill to A, so A will be debited.
Yes.
And bills payable account will be credited. Now, there is a question, why the same document is called bills receivable in one case and bills payable in another case. So, because A and B both may be the persons who are selling the goods on credit, so they may be receiving, both of them may be receiving bills from the other parties. So, how will they distinguish whether one the document which they are having or the instrument which they are having, well, the payment is to be received against them or payment is to be made against them. So, the person who draws the bill, he calls it as a bills receivable, and the person who makes the payment is called, he calls it a bills payable. So, the same document is called by two names.
Okay.
So, the entry, as I repeat it, in the books of A, bills receivable account will be debited and B's account will be credited, and in case of B, A's account will be debited and bills payable account will be credited. So, this is how the two entries are passed.
And now the second situation would be?
Okay. Now, there are three more situations under this.
Yes.
Dr. Bansal has told regarding the first situation that if the drawer retains the bill with him till due date, that is till the date of maturity, if he keeps the bill with him and the due date he approaches, ki sir, I have got a bill with me, please make me the payment. If this is the thing, then this condition was there.
Okay.
The second situation is when we approaches the bank to get that bill discounted. So in case if we got the bill discounted from the bank, the entry would be in the books of drawer. It would be bank or cash account debit, discount account debit to bills receivable.
Okay.
What happens actually over here is that we are getting a cash, the bank is going to give us the money.
Yes.
As the bank is going to deduct some discounting charges,
Yes.
these are our expenses, so it would be debited, and we hand over the bill to the bank, that bill receivable, that's why the entry would be to bills receivable account.
That's right.
As far as the B is concerned, the draw is concerned, no entry is going to be passed in his book,
Yes.
because he is not concerned what the A is going to do with that bill.
That's right.
Whether he is retaining the bill, whether he is sending the bill to the bank,
Yes.
whether he is tearing off the bill and throwing in a dustbin,
Yes.
or putting a fire in it, no, he is not concerned. He is only concerned on the due date of the bill.
Bill. That's right.
So now the third situation is there may be a possibility that A is going to hand over the bill to someone else,
Yes.
because A is a trader. So definitely he is also going to purchase the goods and services from different places,
Yes.
and he need to make the payment to them.
True.
In place of making the payment in terms of cash, it could be a possible thing that he hand over the bill to them. So this transferring the bill is known as endorsement of bill.
Endorsement. Yeah.
Here we are not using the word transfer, but I am telling you that transferring of such kind of bill from one person to another is known as endorsement,
Other than bank.
other than the bank.
Okay.
Bank, so we are going to go simply for discounting.
Yes.
So this situation is endorsement of bill. So here the person who endorsed the bill is known as endorser,
Okay.
and the person who receives the bill or to whom the bill is given,
Yes.
that is known as endorsee.
All
These are the two other different terms which we are going to use in this lesson.
Okay.
So suppose A and B were two different persons, A is a seller, B is a buyer,
Yes.
and this bill is given to X, the another third person. So here A is the endorser and X is the endorsee.
Okay.
Here, as per the rules of accounting, whosoever receives is going to be debited.
That's right.
So endorsee will be debited to bills receivable account. Bills will goes out. Again, nothing or no entry is going to be passed in the books of the drawing. As far as the endorsee is concerned, he is going to receive the bill. So in his book, that is a third party endorsee, in his book, bill receivable account will be debited, and from whom he has received the bill? From A, so we will write to A, or it could be any other person, so we can write endorser. Now there is a fourth situation. This is one of the very important situation or condition or help which is provided to us by the bank. That bank collects the bill on our behalf on the due date. We are not discounting the bill before the due date. On the due date, we approaches to a bank like it happens in case of the checks. Suppose if you receive a check, accounts pay check, what happens? We deposit that check in our account.
True.
It cannot be encashed on a counter.
Yes.
And bank performs this function of collecting the check from the another party and depositing the money in our account.
That's right.
Same is the case with the bills of exchange.
Okay.
We deposit that bill to the bank for collection purpose.
Okay.
Here, two different entries are going to be made.
Okay.
One is bill sent for collection account debit to bill receivable account. This is in the books of the drawer.
Okay.
This is basically a token entry, nothing is to be done with it. When we are giving the bill to a bank, in most of the cases, it could be possible that they are not going to pass any entry because nothing has, no transactions took place.
Yes.
Simply you have given a bill to a bank for collection.
Yes.
Now, once the bill is collected by the bank, the payment of that bill is collected by the bank and bank deposit the money in your account or in the account of the drawer.
Yes.
Our bank account increases, so we write bank account debit to bill sent for collection account. So this is something a cross entry and nothing else. What happens in earlier case we say bill sent for collection account debit to BR or bill receivable.
Yes.
And in the second entry we say bank account debit to bill sent for collection account. So net entry, if we look at the net effect, it is simply bank account debit to bill receivable account.
Okay.
Now here as the payment is made, there is a need of entry in the books of the drawing.
Yes.
What happens in case of the drawee? He is simply receiving the bill, irrespective whether he receives the bills from drawer, from the bank or from any other party.
Yeah.
He receives the bill, so here it would be bills payable which he is getting back.
Yes.
As Sir has well in advance told you, कि for a drawee as he is going to make the payment, for him it would be bills payable.
Yes.
And for a drawer it would be bills receivable.
That's right.
So Here he is going to make the entry bills payable account debit to bank or to cash, as the condition may be. So these are the situations or basic accounting treatment which we are going to meet in the books of account of drawer and drawing.
So far, we discussed all the important scenarios, all the accounting treatments that should be done when there are 4 situations. I hope you have understood this chapter well. So far, we learnt about definition, its important features, terms, parties to bills of exchange. Now you'll be able to solve all the other illustrations and questions that are there in your self-learning material. In case you have any query, you want to ask any question, of course, apart from our audio and video programs, you can surely contact us in person. We'll be right back with another set of practical questions and an important concept, which is dishonor of a bill of exchange. But before I take leave of you, I would like to thank my expert, Mr. S.K. Bansal, who is retired lecturer from Commercial School, New Delhi, along with Dr. Piyush Prasad, Academic Officer, Accountancy, NIOS, for their valuable contributions, suggestions, and of course, this discussion. Till we meet next, please take very good care of yourself. Be a successful self-learner.
हिंदुस्तान के हर कोने में नौजवानों के पास प्रतिभा है, उन्हें अवसर चाहिए।
NIOS देता रहा है युवाओं को अवसर आगे बढ़ने का। NIOS से पढ़ने वाले इन युवाओं ने किया है संस्थान को गौरवान्वित। दिव्यांगों ने बन के दिखाया है सबल और आत्मनिर्भर। NIOS के साथ आप भी जुड़िए NIOS के संग।
जीवन ये प्रकाशित करने, राहों को आलोकित करने, हम अपना दीपक स्वयं बने, हम अपना रास्ता स्वयं चुने।
सीमा से विद्यालय जो मुक्त हो, धन साधन समय की सीमा से विद्यालय जो मुक्त हो।
कभी पढ़े हम कहीं पढ़े, वे विषय की लोच से युक्त हो। मित्रों हम उठे और जागे,